So, for example, before we went into the COVID pandemic, the prime was sitting at about 10.25%, I think, or 10.5. So because obviously the country was in shutdown, was in lockdown, a lot of businesses were in lockdown, a lot of things were shut down, and so because they realized that the economy would be in quite a bad situation, the repo rate was used as a means, to alleviate some pressures in terms of payments for people. So it was reduced just so it can create more economic activities in the economy. So that's an example of it being dropped in order to allow people to have more money for spending. Because if repo rates go down, it means your installments go down. So you have more money to spend elsewhere. That's trying to just rejuvenate the economy in that way. But because now we are coming out of COVID, we're in a much better position where economic activities has continued. Businesses are now operating almost fully functional. Well, most of the sectors are almost fully functional as in the same manner as they were prior COVID. So you'll see a lot of interest rate hikes now, which interest rates going back to pre-COVID times positions basically. So that's the reason why we had the last two increases by 0.25, 0.25. So every single month, the finance committees, they have a meeting. Obviously, they report back of their findings of how the economy is doing, how the activity is doing in the country, and they make the decision whether the interest rates go up and down, basically. And then the finance minister announces whether it goes up and down. So we're expecting that throughout this year, most of the time it's going to keep going, it's going to keep rising, right, basically. So yeah, so at this point now we understand that the repo rate is basically how much the banks are charged for the coins and the notes. Then the banks then add a 3.5, like standard spread, which then formulates prime, which would be the 4%, which is repo rate, plus the 3.5, which is prime at this current moment at 7.5%, right? So that's the ideals that the bank would lend out their money to the individuals or businesses, all right? Now you come in as an individual, right? So all individuals are different. So as much as everybody wants to think that we're all equal, unfortunately, in front of the bank, we are not equal, right? There are a lot of factors that go into it. So one of the factors, obviously, is your income, right? So we know that banks have tiers, levels, basically, for based on income. So, for example, you get if you earn between 5,000 to 20,000, you might qualify for a gold bundle package. If you earn over 25,000, you qualify for premium. Then over 600K per annum, for these examples, you qualify for private banking facilities. When you're a millionaire, if you have a net asset value of 10 million, you're a wealth client, for example. So those are levels based on income. So because of the income of those individuals, their risk is deemed different, So for example, if you had 1,000 rand, right, and your friend who's unemployed asked you to borrow me this 1,000 rand, I'll pay you back on Friday.
Yeah.
And you had another friend who's working as a teacher, and they said, borrow me this 1,000 rand, I'll pay you back on Friday. Now, those are two people, but you yourself will look at them differently in terms of the risk of getting your money back. So the risk is basically of getting your money back plus a return, right? So what are the chances that this guy that's not working will give you your money back on Friday against this other person who's a teacher that's working will give you back money on Friday? Yes, there's a chance you might lose your money in both situations, but there's a higher chance of the other one. Yeah. So because there's a higher chance of the other one, you're more skeptical to lend him the money. So what you'll try to do then is, because he's a high risk, is charge him a higher interest. Yeah. So that's basically what governs your interest. The first factor is your level of income determines the risk.
Yeah.
Right. And then obviously the type of facility you're looking for as well. So when it's a loan, because loans are unsecured, it's risky already, because if the bank gives you a loan and you can't pay, there's no recourse for the bank. They just blacklist you. That's it. They can't come repossess cars, house, couches, nothing. Whereas a car, it will be slightly different, because the car is, when you get car finance, it's attached to the car.
Yeah.
For example, so the bank can come in and seize the car and repossess the car and sell that off to try recover some of the money. So again, those are two facilities. One is a loan, one is a car finance, but because those type of loans have different risks attached to them inherently,
Yeah.
So then those things will govern how much interest that you want. So it's based on what you're looking for, and then who you are as well. So how much you earn, your earnings level, as well as how you've been conducting yourself, your credit portfolio, your credit record, basically your history. So have you been paying your account? So Do you have a store account? Maybe you have an Edgar's account you haven't been paying for. So that now qualifies you as a slow payer. Again, if you're a slow payer, you're high risk. You know, if you know somebody that's not paying their bills, you'll be reluctant to borrow them money because the chance of you getting your money back is going to be a problem. So those things as well. So your credit history is very important. So how you managing your accounts, all your bills. Try not to get blacklisted or default on your ITC or credit bureau, for example. So whenever you take an account, whether it be a cell phone contract, store accounts, insurance, all these things that have to be paid monthly, you must make sure that you're paying them monthly and on time, because they come back and they affect your basically your credit history, which affects your interest rate. Basically, that's what determines whether you're a slow payer or a good payer, as well. Yeah. So it's part of the factors. Yeah. Well. Okay. So yeah.
All right. And then I want to find out what like in terms of his salary, how does that have an impact?
Okay.
If the repo rate goes up.
Oh, okay. No, wait. Okay. So the repo rate only affects prime going up, which then remember now all your lending, whether you have vehicle finance, whether you have a home loan, whether you have a credit card loan, it's linked to prime.
Yeah.
So your interest rate will be linked to prime. And then remember, prime is linked to repo rate. So whenever you get quoted on your interest rate, it will always say prime linked. So they won't say 10%. They'll say prime plus 2.5, because we know now prime is 7.5, and then the 2.5 that gives you your 10%, right? So whenever the repo rate changes, like it changed now, prime changed, right? Yeah. That means your interest rate changes as well. So if you have any total form of borrowing, car finance, home loan, credit card, it all went up.
So that's how you see like an increase in some of the installments.
Yeah, your installments will all go up. All of them, every single installment you have, after every single announcement will either go up when repo rate goes up, or it'll go down.
So repo rate doesn't only affect new loans; it also
existing. Yeah. Existing. So your whole term. So imagine now your bond is for 20 years. It will keep fluctuating with repo rate for the duration of the 20 years. So an example is somebody that bought a house maybe for 500,000 before COVID, right? When rates were at 10%, they would have been paying maybe 5,000 rand for that installment, right? Yeah. As an example. Once repo rate was decreased during COVID times, his installments would have went down maybe to about 3.5.
Yeah.
Right. Now that we're coming out of COVID times and the pandemic, things like that, it will then go back up again. So they might be paying like 4.2 already. So that's the same bond. They're staying in the same house, but every other month it literally can change based on the announcement of the repo rate. So that's why some people don't pay much attention. They think it doesn't affect them, but it does. It basically affects your pocket. So every single announcement.
Does it also affect the food prices? Does it somehow get to that point, or?
Well, not directly, immediately, but over a period. Now, remember, also businesses have loans as well.
Yes.
Yeah. So if their loan payments are going up, eventually they're gonna have to increase their prices to be able to pay for those loans as well. Yeah. So, but it won't be as quick as your installment. Your installment goes up immediately as soon as, like last week, you made the announcement. Next month, your installments are all going up. It won't be a significant amount because it's a small only increase by 0.25. But
it's still.
It's still, if you have, so imagine, so if you have a vehicle and a house and maybe a loan, that's 200 rand here, 200 rand here, 200, that's 600 rand. Where are you finding that 600 rand? And we just come off another increase 2 months ago. So again, that's another, so you're looking at the last two increases might be costing 1,000 rand extra than you were paying 3 months ago.
Okay, I know you explained earlier things that can affect the repo rate, but like you just said 2 months ago, like what propels the decision to say, okay, do this committee meet monthly?
Yeah, they meet monthly because remember they're constantly observing our economy, and in order for us to strengthen the economy, they have to increase it back to normal levels.
Okay.
Right? Because we were at unprecedented low levels. Like interest rates right now are extremely low for the past almost 10 years or so.
What were our interest rates before we went into COVID?
It was about 10.25%. So we are 7.5 now. So prime was at 10.25.
What was our lowest in this current dip?
We went down to 7.
That's the lowest.
Yeah, that's what those who were at. Yeah,
Oh, so now
we've just gone back up two increases now, 0.25, 0.25. So now we're at 7.5.
Phew.
Yeah. So there's been people that would have had a big saving. So if we take an example of a bond for R1 million, so if you had a house for R1 million,
Yeah.
Before COVID, you would have been paying maybe almost 11,000 or so. With these decreases, you would have went down to maybe like 9.5. That's a big saving.
Yeah.
So you would have obviously benefited at that time, but now it's going to go back up. So it's not horrible, but you benefited from COVID in that sense, in your payments. But so now it must go back to normal. But it's still going to take a while to get back to where it was, because now it was at 10%. We're still at 7%. So it's still going to be a long while. So we're still basically saving, if I can call it that.
Yeah. So and if we're going at like 2 points, which is like 0.25%.
Yeah, but that's just how they decided at the time. So they could decide to ramp it up and go 0.5. We don't know.
Still, but like I appreciate the not points.
Yeah, 0.25. Yeah, the relief at the moment is something to be grateful for. If we're liking it to hold. Like last year, it held the whole year, because we were still obviously in the pandemic. For most of last year, there weren't any increases. Though they kept keeping it stable. So they're also trying to. Obviously, they won't make huge jumps because it'll cause a panic. Since people don't have that much money to be spending. I mean, on the installment payments in one go, to be increasing it month. So I think they will try, obviously, as little as possible. But we have to anticipate that it is going to increase.
Okay. I just before we close this off, where did you study? What course did you do? How long was it? Yeah.
No, I did
and your job title, just your job title.
Yeah, I did a BCom accounting at UNISA. Finished that, and then I did a postgraduate diploma in finance, banking, and investment management at UKZN, Westfield campus. So that gave me the finance background, basically, the in-depth understanding of how interest rates work. Then I work as a credit manager, basically.
Okay. Wow. Manager, Thank you, Saleem. Do you want people to follow you, or you don't want people to follow you?
No, I'm not a.
You're not a social media person.
No, I'm not like a guru of these things. I'm just trying to break it down to just be simple.
Hey, I mean, we all want somebody to. We all need somebody as mind to peak about when it comes to money.
Yeah,
I feel like I you know, I'm not saying you're gonna dish out advice, but you know, someone might want you to reiterate what you just said. Yeah.
Yeah, I don't know. They can send you the questions. We can maybe come and do.
Oh, you can drop the questions in the comments.
Yeah, and then
fine.
We can do something else again. Yeah.
Yeah, we don't want to get this man into trouble. Thank you, Saleem.
Sure,
Thanks for showing up.
Sure.
Sure.